I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market attempted to extend the rebound, but then fizzled last week. The indexes responded to the upside early on Tuesday on softer inflation numbers, but futures hit a resistance level that we talked about. And anyway, how many times can you celebrate the same thing? That Tuesday rally also failed as news came that a missile had hit Poland. That was proven to be an off-course accident and not deliberate, but the market gave up all of its gains and moved to the downside, and then moved back up when they realized that, well, that might have been just an errant off-course missile. What weighed on the markets were the weak earnings reports that were coming out. Semiconductors, retail, they were really weak. And several Fed heads were out there seemingly and purposefully taking the wind out of the sails of the stock market buyers. Talk more about that in a little bit. Wednesday brought sellers after Micron said that they were cutting production by 20% on weakening demand. And Target got wrecked, 13% to the downside on a big earnings miss. And they talked about really weak holiday sales and the fact that they were badly affected by theft, by gangs. You know, those gangs that are roaming and in certain cities and stealing significant amounts from stores, seemingly unprosecuted. So they were greatly affected by that. Kohl's followed with similar issues and moved sharply to the downside, but it was really mixed for the retail because Macy's and BJ actually fared better this week. Thursday, there was lots of Fed speak. Early selling came on Thursday morning as Fed Bullard gave a presentation that showed Fed funds could go as high as 7%, saying that, well, the most dovish assumptions were that it would get up to 5 to 5.25%. And other Fed heads were out there speaking, really wanting to let investors know that there was still quite a bit of time to go. And once they got up to some level that was restrictive, they would probably stay there for a long period of time. But investors, they would not let the stock market stay lower. It was down some 50 points and then it recovered on Thursday to only close down 12. Friday, the market moved up early as they seemed to be looking past all of that Fed speak, and that resilience that we've seen in the market really has continued. The indexes, they were up again, but then failed in that resistance area after being up close to 40 points and gave up most of that. And now here at midday, they're up about 13 points on the day on Friday. This stuff that's going on with FTX and SBF, I must comment on that. It is unbelievably fascinating. This implosion is what we warned about. The contagion really continues, and the confidence in the crypto cult really looks like it's broken. There will be thousands of these cryptocurrencies and altcoins that will be gone, and we think that prices will still be significantly lower. But for the stock market, there's really no effect so far. The new CEO that stepped into FTX says he's never seen anything like this, and he was the one that helped with Enron. So this whole thing is just unbelievably crazy. And there's a political statement I could make about that, but I don't think I will. We just know that tons of money went from Sam Bankman-Fried and FTX to one of the political parties. And when you look at this whole thing and how it came apart, you got to ask, is SBF a criminal or is he just unbelievably stupid and got lucky being in the right place at the right time? And he got a cult following that is now really getting hurt. But there's huge regulation now coming in crypto that can't be avoided. And this great crypto casino that I did a special on many, many months ago, when Bitcoin was up in the 47,000 area, saying it was going to 19,000 and then lower. Well, that has happened, and this is a real problem area where investors are likely to steer clear, maybe for a very long period of time. The stock market rebound has been great. S&P 500 up over 15% from its lows around 34.91. And all of that really came on time for the projections that we had given. And our analysis shows that strong market conditions and higher prices are still likely. But the upside, we believe, is limited, both by the Fed, which wants to stop the positive wealth effect from happening, because, of course, that's part of what brought the inflation, with all of the ridiculous government spending, all of the money that was poured into the pockets of people through tons of programs, and that lifted valuations to a very high level. And that's the problem also, a combination of the Fed that wants to stop that and the valuations that are, well, mind-boggling how high they still are, and that people are out there actually talking about new bull market when the numbers are at levels that stopped bull markets before. Let's just take a quick look at that. This next slide I'm going to show you right over here is a reflection of stock market valuations. This was put out by stockmarketvaluation.com. And what is important to note is that right now, if you look at, well, a week ago, the aggregate U.S. market value was just close to 43 trillion. The annualized GDP, 25.8 trillion. So therefore, the Buffett indicator, as you can see the formula there, is at 166%. Now, the 2002 peak, which we know included valuations that were just historic as far as the dot-com goes, when it peaked in 2000. I'm sorry, that should say 2000, not 2002. It was a Buffett indicator, in other words, a market value to GDP of 142%. The 2007 peak, that was about 107%. So you could see how that wasn't anywhere near as far, but then the great financial crisis came and took the market apart. And in 2021, that peak, which is the bull market peak of the market we're in now, the bear market we're in now, was at 202%. So right now, we're at 166%. Granted, that has come down as we've seen the GDP grow some, and we have seen the stock market give back a sizable amount of that big, crazy bull market. Still, it's at 166%. It's historic. The market is still massively overpriced right now. So that's one important point. The second important thing I want to look at right over here is the yield curve inversion and recessions. These are this is a great slide that I essentially put my own annotations on via currentmarketvaluation.com. It looks at the U.S. Treasury 10-year to 3-month spread, 1962 to present. And those little arrows you see on the bottom, I put in there, and it shows you that where the bear market lows were that essentially came during or after recessions, mostly. And the question is, have we even had a recession yet? Well, there's a lot of denial about that. But the yield curve at levels right now, as you could see right over here, the steepness are at levels of about 40 years of extreme. The Fed knows they have a lot more to do, and you heard that commentary this week. Inverted yield curves brought all of these recessions. Here's an inverted yield curve here, and here, and here, and here, and here, and you can see the recessions that followed each of those. This little gray area is the pandemic right there, so it really wasn't much of anything. And there was a low that came pretty much right in the middle of that in March of 2020. And you can see over here, we are at an extreme yield curve inversion. And that means, just as all of these times right over here, it is extremely likely that the recession is yet to come. And it's extremely likely that the bear market low will come after that starts. So there is some period out over here that will likely see another gray area over there and the stock market moving down again. So I thought it was really important to share those two slides because it really gives you a pretty good example of what is coming up here in the problems of valuations and the likelihood of the recession that is ahead. So that I think is important. So while upside is still likely for the indexes, I think it's limited with a strong probability that the low of 34.91 will be tested or worse. Bulls are ahead of themselves, and this is likely just another hook. We'll show you more on this later as I give my intermediate view of the S&P 500. For the week here at midday on Friday, indexes, they're down a little bit. The Dow has been the strongest index by far as money moves into those old leaders, down only about 0.3% on the week. The Russell, the worst of it, down about 1.5%, and the S&P 500, the Nasdaq, down about 1% or a little worse. So overall, that's pretty strong after the big gains in the face of what the Fed shared with us this week and the poor earnings projections forecasts that are coming out. Bond market, 30s up 2.25%. 10-year yields fall a couple basis points to 3.79. Gold market loses about 15 points. Silver down about 68 cents. There were a couple of weeks of very big gains in there, so these pullbacks are really not significant in an overall looks like a bullish picture there, and Katie will bring more about that coming up in a few minutes. Dollar gains about 0.2%. It's stabilizing now after hitting our downside targets, and that analysis was amazing. And the oil market, well, talk about amazing. It's down over $9 this week, and it got up to 94, and we showed that we thought it was going to go back below $75 in January, February. In fact, it actually could test under $63 based on our analysis. And you really don't want to miss our analysis on all of the futures and indexes. You can see that in FutureSpeak. Every Wednesday, Arby puts that out, does an amazing job with that, and I think that you will absolutely love watching that show. That's for level 2, 3, and 4 members. Coming up in this show, there's some unbelievably great stuff. Don't forget these high market valuations and the recession that is coming. And you will now see coming up, Katie is going to review that analysis in gold, and she's going to illustrate bullish option strategies using Tastyworks platform. And we're going to show you how to open up a Tastyworks account at askSlim. Arby is going to show you a sample of the Future Speak show in which he does analysis on 24 futures contracts, weekly and daily cycle analysis, and he's going to share the analysis on the Treasury market, 10-year notes, which are positive. And I'm gonna show you this amazing offer. We're in our final 3 days on our workshop package. You're gonna learn our charting style with our cycle analysis workshop and learn how to improve your performance with a bonus at no cost of the 5 essential building blocks to successful trading. And then I'm gonna show you my intermediate view on looking at SPY. And I'm gonna give you the cycle analysis through March. So great stuff coming up in this show. Don't forget, we have a bonus, this cycle analysis workshop. I'm going to give you the details on that in a few minutes. If you want to learn more about askSlim, please do go to our website, explore, share, and follow us there and everywhere we put stuff up. If you're new, you can go to askSlim.com, become a level 1 trial member, and you're going to get our full index analysis. And you can just go to the website and see the special on that. YouTube, subscribe to the channel, click the notification bell so that you know when we post things, and do like this video, give it us a thumbs up. Follow us on Twitter at at askSlim. And for any questions you have about our specials, membership, workshop special, anything that we put up here, write to Matt at askSlim.com. This is trade planning with options. Katie does amazing work here. You're going to not only see her analysis on gold, but you're going to see positive setup based on this analysis, looking at /GC, and she's going to use the Tastyworks platform to illustrate some bullish strategies that you can use. And then we're going to show you how to sign up for Tastyworks right through our website. So, Katie, show them this great work.
Hi, this is Katie with askSlim. On your screen is the Cycle Low Timing Tracker, which is a tool we developed for our members to identify opportunities that may be setting up around cycle bottoms. Today we're going to focus on gold futures /GC. It is found on the Cycle Low Timing Tracker in this bottom confirmed box for the weekly time frame. That means that gold futures have exhibited enough positive price action on the weekly chart to trigger the bottom confirmed algorithm for that time frame. Also, I want to point out these two colored boxes next to /GC. Those show a combination of cycle phasing and momentum conditions that we can quickly just take a glance at, and you can see that both the intermediate term and short term boxes are green with positive conditions. Also, tomorrow's Cycle Low Timing Tracker will show /GC in this box, the cycle timing box for the daily time frame. So that'll be a period of time of approximately 7 days when we expect the current daily cycle to form a low and then begin to move up into the rising phase of the next daily cycle. Now let's go over to the chart and see what that looks like. This is a 5-year weekly chart of gold futures. These large gold cycle brackets on the bottom represent the dominant cycle in gold futures, 72 bars in length. That dominant cycle is broken down into minor quarter cycles of 18 bars in length. And we have also overlaid the silver future cycles on here, and those are these dashed silver cycle brackets. These blue vertical dashed lines over on the right here show a period of time of a few weeks around the ideal cycle low, which is shown right here, and that's when we would expect a bottom to form, and for gold futures in this case to move up into the rising phase of the next cycle. Well, you can see that the gold futures went through quite a bottoming process in here, and finally moved up into that rising phase now found in the bottom confirmed box for the weekly time frame on the Cycle Low Timing Tracker. So we are currently just a couple weeks off that intermediate low. Momentum has turned positive in here as represented by our proprietary momentum indicator, the reversal scout. We do have a resistance zone up here, so we will want to watch this area carefully. The bottom of the zone is at about 1794 and the top is at about 1903 with the midway mark at about 1848 and a half. You can see with this blue dotted line that our initial projection is to the top of that resistance zone. Now let's switch over to the daily chart. Notice the blue vertical dashed lines again. Those represent the daily cycle timing window, a period of time around the ideal cycle low on the daily chart, when we would expect this current cycle in gold futures to form a low and then begin to move up again into the rising phase of the next cycle. That period of time starts on Friday, November 18th. Now we have a support zone here. It starts at about 1725 and a half on the top to about 1684.60 on the bottom. And what we need is for that zone to hold as gold futures retrace into this timing. Now, momentum on the daily chart is positive with both the reversal scout as well as the slim ribbon. The slim ribbon colors the candles green, gray, or red depending upon momentum conditions. So what we want is for gold futures to retrace into this timing window, for this support zone to hold, and then for gold futures to begin to move back up again into the rising phase of this next cycle. Now we can use the slim ribbon PO down here for a signal. If momentum remains positive during the retracement and then price turns up, we may get a momentum continuation signal to the upside. We could also use the lower time frame charts, such as the 2-hour chart. Currently, momentum is negative on that chart, so we could watch for it to turn positive again, and that would set up a possible long side entry in gold futures. Now let's go over to the Tastyworks platform and talk about a couple of possible setups in gold futures. Here is the Tastyworks platform. I have /GC loaded in here, and two things to notice here. First, the IV rank in /GC is low, currently 12.9. That would suggest long premium strategies that would benefit from a vol expansion. The second thing to notice is that there's going to be a roll. These next 3 expiration cycles right here are all in the current contract. And after that, we'll be in the next contract. Notice the difference in the pricing, just a little bit different. So that is something to be aware of. As far as which expiration cycle to choose, I'd like to give myself some time. I'd be inclined to choose, say, the December 12th expiration cycle with 25 days to go. You could also go out to the December 27th with 40 days to go, somewhere right in that range. So for demonstration purposes, I'm going to use the December 12th expiration cycle. So we're going to pretend that we got our retracement into that support zone already and are now moving back up with a signal on, say, the 2-hour chart or maybe the slim ribbon PO. Now, when that does actually occur, your strikes will be different than what I am going to demonstrate right now. So you could simply go in and buy a call. For simple purchases of a call or a put, I like to buy an in-the-money option that already has some intrinsic value. I use the strike that's right around the 7D delta, so that would be the 1745 strike. And you would be paying a debit of $45.60 for that. Of course, that's $4,560. And that's also the amount of capital that you would have to put up, and it is your max loss. Now, if you move closer to at the money, you're going to pick up fewer long deltas. You'll notice that this is 70 deltas, and of course, that is what you've got. If you move closer to at the money, you get fewer and fewer long deltas, but you will also pay less for the long call. Now, the simple purchase of a long call gives you unlimited profit potential to the upside and capped risk at the amount of the debit that you paid. If you were to hold this to expiration, you will notice that you need to clear the debit that you paid in order to begin making a profit. That's shown on the risk graph here. With these red and green areas. Where this green profit zone begins is your long call strike plus the debit that you paid. Again, that's if you held to expiration. Now back to the table view, another long premium trade that you could do in here would be a call debit spread. That would be buying one in the money call and selling one out of the money call to reduce your cost basis on that long option. Now you can make the debit spread as wide as you want, even down to just a $5 wide spread. This would have you paying a debit of $250. That's your max loss and your capital requirement. Your max profit is also $250. A $10 wide spread would have you paying a debit of $480, which is your max loss, and your max profit in this case is $520. Now, of course, those are not the only long premium strategies that you can use, and even these that I've demonstrated can be customized to suit your trading style, account size, risk tolerance. To follow our options trade ideas and to learn more about all the tools and services that we offer, as well as about our marketing partnership with Tastyworks, please come and visit our website at askSlim.com.
Announcing the askSlim marketing partnership with Tastyworks. Open an account through our site today. I want to take you to our website so that you can see how you can open up a Tastyworks account just by clicking on our own site here at askSlim.com. This is the main page, and there are a couple of ways that you can do it. You can see up here where it says Marketing Partners and Tastyworks, and you can click on that, or you can go to this little arrow here on the carousel, click left one time, and you can see that it brings you to the Tastyworks account opening page. Just a great partnership that we now have with them at askSlim.com with Tastyworks. And click anywhere in here and you'll be able to be taken to the place where you can open an account. Great commissions, cap commissions at $10 maximum per opening leg for listed options, and unbelievable bonuses that you can see here, up to $2,000 for opening an account. It helps us, of course, if you open an account at Tastyworks through askSlim, and of course it helps you through these big savings and using what Forbes says, and we agree, as the best options trading platform out there. You've seen Katie as she has illustrated using this platform, and we're going to do more and more of that going forward. So we wanted you to see that. Please do open an account at Tastyworks today. Get these great commissions and the bonuses for opening an account. Thanks. This is a preview of FutureSpeak. You're going to see weekly and daily analysis of the 10-year note market. We do this every single week in FutureSpeak, so we wanted to give you this preview and just share this sample of what we put up of these 24 different futures contracts. This is for level 2, 3, and 4, so you need to become a member, but we're going to give you this sample as our previews the 10-year notes /ZN. Show them this great work and this good opportunity coming up. Arvi, go ahead.
If we jump over to the notes, you'll see what's happening here. And we have yet to see this turn up really sharply, but there are good odds it'll get a move into this zone from 113.275 to right around 115 or so. That looks quite reasonable, and that would confirm that we have had a shift here in the longer cycle here in the notes. So this is overall acting okay. If we jump over to the daily, again, you can see we had this bearish slim ribbon all the way from this point right here around 118, negative all the way down to around 108, 220 or so. Then are now forming a base. Things are now finally changing. We now have a positive slim ribbon in the notes. So watch to see if we get a minor pullback as yields get a bounce. We see a pullback in notes that will likely set up a long side opportunity here for a move back to the upside. And these zones are all rising, but they come in 111, 110 to 110, 125. Okay, so that's the level on the downside. There's a 78.6 at 112.260, and there's this old high right here at 113.055. Okay, so those are the levels on the upside and downside in the notes.
Super work on that. Thanks. Stock market view. This is going to be my intermediate analysis, but first, I want you to learn how we do it. You've seen all of this amazing work, and now you can learn cycle analysis, and you will never look at charts the same way. So please do look at this great stuff I want to show you. Don't scroll forward yet because you're going to love this. What I want you to do is I want you to go to the askSlim website, which you can see right over here, and go to the top right over there where you see Learn More and click on that. And that's going to bring you into the special workshop page in here. And if you scroll down, you will see everything that is available in the cycle analysis workshop. The key thing is to watch this video right here where I show you everything that is in the workshop. And then you can see on the bottom in here everything in each of the 20-something modules that we have in here and that will give you the great information. And you're going to save a ton of money doing this. And also, as a free special that we're giving you, the 5 Essential Building Blocks workshop is right here for free. If you click on that, it's going to take you to this workshop, and you'll be able to just see everything that we do on here on these 1, 2, 3, 4, and 5 building blocks, which are just an amazing amount of information in here in these 6 videos in this bonus workshop. So it's the 5 essential building blocks, which is a bonus, and this workshop, which is the a cycle analysis workshop, all for this just amazing price that we're offering right now in the special bonus final weekend right now. There's only 3 more days. So this cycle analysis workshop and that bonus is going to be 44% off if you're not a member. So that's a $15.94 value for just $8.97. But if you're a premium member, any level, or you join right now, you can save an extra $100. And you write to Matt at askSlim.com for that special link of only $797, or sign up on the website if you're not a member for $8.97. This is just an incredible opportunity for you for a price that you will never see again. This could be $5,000 from other sites if they could even reproduce anything like this. This is amazing. Please take advantage of that right now. All right, stock market intermediate view. We're going to look at the SPY analysis for November through March. You can get this full analysis, because I'm only going to look at the weekly on the S&P 500, NASDAQ, and the Russell in our stock index report. It's a daily report that Matt puts out. It's astounding. That's for level 1 and up. So if you're not a member and you want to become a level 1 member, 3 months is only $45. So go to the askSlim website and sign up, become a level 1 member, and get our full analysis on all of the indexes for just $45 for 3 months. Absolutely amazing deal. All right, so now let's switch over and look at the stock market chart. This is SPY, the S&P 500, and this big rally over here from the pandemic through the peak over here in the very end of last year, the beginning of this year, was just a monstrous rally. I call this the everything bubble, as other people do, as the market made these enormous gains. You can see over here what we had labeled as the Great Reset, Phase 1. The reason I call it Phase 1 is because I think the Great Reset is going to last for many years. Those people that are an analyst out there talking about the next bull market, well, you're going to have some bull markets that come over these years, but I think they are cyclical bull markets, and there is a secular reset going on that happens historically. And I'm going to show that in my year-end show that I'm already working on about the history that says there are many years of correction out ahead of us. But let's just talk about now through March. Here is where that peak came right over there, and we're just going to look at the cycle analysis. So what you see in here on the bottom are cycle brackets, and that gives us an idea of the energetic movement in the market. I'll blow this out a little bit again, and you can see each of these minor little cycles in here, as you can see how they trace out right here and here and here. Those are just a little minor cycle in there, and then there's a bigger dominant one and an even bigger dominant one right there. And each of those brings periods where they put in energy, or as we call this, the heartbeat of the market. There are energetic movements in either direction. When they are rallying, when there's this upward movement, you get rallies. And when there's corrective movements in here and they all come down together, we put in these yellow areas here, and that's where there can be some sizable declines. You see right over here where it came down big. Here is a period of risk here, and the next period of risk is out over here in the January to March period. We have been looking for a rally to come and fail, and that's what we think is happening. Now, you've seen the market trying to get up in here these last couple days and struggling. Let's talk about where these resistances are and supports are right now. So the resistance area right here, this is 398. This is the major 38.2%. That's from the peak. the bull market peak. This is the intermediate 50%, which is from this peak right over here. So this area right in here between 398 and 405 gives us the first resistance zone. 405 seems very reasonable to us between now and when we think the peak is coming out here in January. Then there is the potential, if the rally really gets strong, that it gets all the way up into this zone between 414 and 419. This is really, in our opinion, more of a long shot, but you can see that the green projection right up here is the most extreme upside projection that we see. So right now, as you see this minor cycle right in here, this declining phase in here is fighting against this big rising phase. And momentum in here, as you see this green arrow in the reversal scout, that's a proprietary indicator, which if you become a level 4 member, you can get that. This turned bullish right over here and remains bullish and gives you this big upside energy that you see in here. So you have big upside energy right here, a dominant cycle that's pushing up, and a minor cycle that is here coming into a corrective period. When that happens, the consolidation normally is only into the minor support. That makes sense that we'll see a move down here close to 380 in the S&Ps. It's only 15 points or 150 points in the SPX index. That's not very much. Then the question is, after this correction, how much rally can you get? Can it move through what's called a VTL, a valid trend line? It comes from cyclical peaks that you can see coming down through here. Or is it going to stop in that area as we have the possibility in there drawn? So this is likely going to meet resistance in here close to 405, pull back in here somewhere near the 382 area maybe, and then get another rally here, either equaling or above that. If it gets through the VTL, it probably will have that upside spike into the 414 to 419 area. But then after that, we get into the riskiest period. Now the intermediate VIX trough, in other words, the point where VIX should be the lowest, is around mid-January. So that tells us that the peak in the stock market is somewhere around mid-January. It might be the first week to the third week of January. That's why you see these projections up to the time period that we have them here. So the minor cycle supports are down over here, and that says that it's likely that the market will begin to struggle and get into this corrective period. And we see it getting some resistance right now. But then this period in here where it makes a low somewhere in mid-December and then has another rally, that next rally is one that really gives us some sense about the strength of the market. Again, we think it'll be 405 to potentially the zone between 414 and 419 into January. If this corrective period turns out to be steeper and gets lower and even below these levels here of support under 370, that will then give us a warning that this upper track is now not likely at all. So we learn from what happens and get the messaging in the market of how the markets move in particular areas, in windows for correction or windows for advance. In this window for advance, where you had the dominant cycle moving up and the minor cycle moving up, this 15% gain was very strong. So that tells us that the market right now has strength and that this correction is likely not to come down very far, out into this mid-December area. Down into mid-December, up into mid-January, and then over here is that big period of risk out into February, March, and maybe even out into April, where the biggest risks come. And it's likely to get the stock market, the SPX, to fall below that low where it made just under 350 on the SPY, with the potential of coming down here to 320 during this time frame. If for some reason what happens is that this gets up here or through this to the top level, and then this declining phase over here does not make a new low, it will give you a sense that we are now in a period of a cyclical bull market. I don't think that's the case. That is the lowest probability. The highest probability is what I've told you about in here, and then moving down significantly into this February, March, and maybe early April timeframe, where we expect the lows to come right over here. That is my intermediate analysis on the stock market. Don't forget, become a level 1 member and you can get the full analysis on SPX, NDX, and Russell with our proprietary indicators on that report that Matt puts out every single day. And I want you to make sure that you go to the askSlim.com site and do explore it, subscribe, share, follow. And if you're new, become that level 1 trial member and get that full index analysis. Don't forget to sign up for our cycle analysis workshop, final 3 days. If you're on YouTube, subscribe to the channel, click the notification bell, like this video, give us a thumbs up. Watch our member videos that are in the playlists here in past shows. On Twitter, follow us at askSlim. And for any question you have on all this great stuff that we shared, please write Matt at askSlim.com. I want you to be so unbelievably careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising